Hi, Adam Hewson here, coming to you from the digital studios of Market Club. And the market we're looking at today is one of our favorite markets, and it is gold. The symbol is right here on Market Club. And we're looking at a daily candlestick chart going back to the September 3rd of 2009. Now, obviously, this is the big move that took place in December, and I should say late November and December, and culminating in this high right here. Then we had a series of kind of breaks going down and then going up here. We've been advocating that the market's still in a very broad trading range, and what you can look at in a situation like that is when you get a market, this is a RSI indicator. Okay, when you get markets that go over the RSI, the highs, and it can be for an extended period of time like this was, they tend to have a pullback. And this is the case, I think, in the gold right now. This is the previous highs, right around the 161, 162 level. We briefly touched over that on Sunday. Sunday is a very quiet day in the gold markets. Not all the participants are in. Europe's not in, certainly. You've got some Hong Kong traders, but it's pretty thin market to move. And, of course, we moved up. But today's move down to the 155.60 level, actually below, right around the 154 level, indicates that there is resistance right at these levels, and I think that's the important thing to look at. We could see more of a two-way market and some culmination of a setback. So let me take everything off the screen just for a moment, and let's take a closer look at this market. So as we said, let's go closer in. Very simple to do with Market Club. And you can see that the key level is going to be to watch this market at 150.30. Let me write that down so we just all have a measure of that. 1,150.30. That is the level that we will exit our position with our trade triangle technology, our daily trade triangle technology. Now, our weeklies, we've been long this market from right around the, I think it's the 1134 area. So we will come out with a nice profit if we get stopped out. Worst case scenario, we get stopped out at this level. But what I want to show you is something I think a little more important than just getting stopped out of the market on a short-term trade. By the way, this is a negative engulfing line if we're confirmed down tomorrow. So it's something to watch very carefully, not unlike we're seeing here and some other spots. But let's just scope this out just a little bit more. I have to get back to my cursor to do that. And let's just go to scope this out. And what I wanted to show you is this, is back in 2009, we had the run-up. So back in this period here, we had a very similar kind of run-up to new highs. We had the pullback, like we've seen. Then the market just basically broke over. It looks like it was going to go and test and go through the highs here, but it came down and had a prolonged period, several months, going sideways. And I think that's the type of market that we're doing now. I think we're basically just going sideways to build energy to push the market higher later on. However, having said that, I'm going to put our trade triangles on, and you'll see exactly what they're saying. And the trade triangles, for the most part, are very, very positive. Just so trade triangles, you go here, monthlies, push it up here. You can see we've been long from 929.50 for quite some time. That is from February of 09. Over a year, we've had this monthly signal, this monthly trade triangle in place from $929.50. Our weekly's been in place from 1133.19. Actually, I said 1134, but it's 1133.19. And our daily's been in position from $1,107.54. So as I said, if we go below tomorrow, $1,150.30, then we're going to have to say that the market has, for the moment, short-term topped out. Please don't misunderstand what I'm saying, thinking I want to be short this market. It's not the market to be short right now. The overall play in gold over the next couple of years is probably going to be on the upside, but we are looking at a period where we're going to go this sideways action. I think that's exactly what we're doing right now, this sideways action. So that's how we see gold. Tomorrow, meaning Tuesday, check out the support. If it goes below this level, then we're going to see more pullback, and the RSI has turned down. It's over a overbought situation. We could see a pullback possibly to the mid-level, and then possibly to the 30 level. So Adam Hewison from Market Club, thanks for stopping by. Every success.